Without big headlines, bonds are still making their move. We have slow and steady gains still happening. Now this morning's just a tiny bit weaker, but really the most of the movement is sideways. With no major economic data on the calendar, the bond market seems to be taking a reflective pause, continuing its slow, steady drift towards lower yields. There's no single catalyst behind the modest rally, but several subtle forces could be at play. One, we have soft economic sentiment, and traders may be leaning into a more cautious view of growth, especially with few upbeat data points to counter it. Regional indicators. Reports like the Philly Fed Services Index, not usually market movers, can still reinforce the idea that activity is cooling. There are cross-market signals, oil prices, currency movements, and even Fed balance sheets expectations may be nudging bond yields lower at the margins. And then finally, lingering banking and liquidity concerns. Last week's jitters about financial stability and Fed policy timing could still be echoing in traders' minds. The result, light volume, modest but meaningful progress, and yields now sitting at their lowest levels in more than a year. This kind of slow, low drama rally is often the most sustainable for mortgage rates. When the improvement doesn't hinge on a specific report, we have less likelihood of things overnight changing suddenly, and that's why I think we've seen this very steady movement sideways with small improvements as we go. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.